Ladies and gentlemen, good day and welcome to 3i Infotech Q2 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from EY IR. Thank you, and over to you, ma'am.
Thank you, Lizanne. Good evening to all of you. Welcome to Q2 FY24 earnings call of 3i Infotech Limited. The results and investor presentation have already been mailed to you, and you can also view it on our website at www.3iinfotech.com. To take us through the results today and to answer your questions, we have top management of 3i Infotech Limited represented by Thompson Graham, Managing Director and Global CEO, Sachs Krishna, Chief Operating Officer of Value Business, Sushant Purshan, Chief Revenue Officer of India Business Region, Harish Sinoy, Chief Operating Officer, Professional Services and Chief Risk Officer, Sanjay Rava, Chief Financial Officer, Mohan T.S., Chief Human Resources Officer, and Varika Rastogi, Company Secretary and Head Legal. Thompson will start the call with the business update, which will be then followed by Sushant, who will provide an update on India business. After that, Sachs will provide the update on the value business and Nure Bharat Railtel project, and then we will open the floor for Q&A session. As usual, I would like to remind you that anything that is said on this call that reflects any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual reports that you can find it on our website. With this, I will now hand over the floor to Thompson. Over to you, Thompson.
Thank you, Asha. Good morning and good evening to everybody, and my greetings to all of you. We are happy to report that your company has clocked a revenue of 210 crores, which is a growth of 8.2% quarter-on-quarter, 8.7% year-on-year. This is a gradual progress which we have made, and also at a positive PBT of 26.4 crores before the exceptional item, which I will touch upon it actually. The H1 revenue stood at 404 crores, and we are in course for our annual projections we have made, and this is also a year-on-year growth of 13.6%. With the backdrop of the headwinds, your company is making steady headway, though they are very challenging economic scenarios, especially in our major markets like US. We are still holding ground, and we have been steadily slowly growing our businesses. And our challenger and our disruptor model is starting to pay way for it, because as customers are looking to optimize their cost, they are seriously looking at challenges like us and see if we can take up more business from our larger peers. If we look at some of the other quick updates, are that if you look at it we've logged in almost 35 new logos in the quarter which has gone by, which is a good progress where we have initiated new logos with multiple, new customers have been brought on board. It also helped us, open multiple opportunities with them. I will not get into the details of the value business and enterprise business in India region. Sushant and Sachs can expand on it. The key other important aspect which I want to touch upon also is that we have made some very strategic partnerships with InsureMo for insurance and Databricks. These are very important partnerships for us, which will help us complement the capabilities with these partners and also make us ready for the newer markets which we want to expand. And we also received the Gartner coverage in the market guide for Oracle Cloud Infrastructure Managed Services Specialist, and also Cloud Services in insurance with the PEAK Matrix assessment as well. So these two are remarkable achievements for our teams in the hard work. The last 2 years, we have been able to get these get into the Gartner reports, because they're very important for us, and this is a great enabler for us to drive business. We are also recognized as a by two application testing services vendor worldwide in the market guide for testing services as well. So these are some of the key headlines. And also our future tech business is progressing, and they are released their new products and platforms, which is also creating a lot of interest, especially in the CEO cockpit and the CXO DSS, where we have also been able to get new customers and revenue. And the potential of this also is being evaluated as by Gartner as a potential. It is not just descriptive and express action, could be even possibly a digital twin simulation is where it is being explored. Coming back finally into the, before I hand it over to my colleagues, if you look at the, just to expand on as part of an ongoing effort to build good governance, impairment has been carried out, which is a activity we do quarter on quarter for our US subsidiary, VIB, and we have been this goodwill which has been in our books for quite some time now. It's far old legacy beyond our pre-carve-out times. And after the impairment testing, a non-cash impairment charge of totally 179.6 crores has been recorded for this quarter. This is a very positive way forward as we are building good governance for the organization, and we are also resetting our baselines and benchmarks in critical geographies like US, where we want to build on this one-time cleanup we have taken. And so this is a very positive step which we have taken after very careful assessment of the valuation of this subsidiary. Yeah. So coming back to this, probably what I will do is I will pause here and let's have more time for questions. So I'll probably hand over the mic to Sushant. Yeah.
Good evening, good morning, everyone. Myself, Sushant here. First of all, thanks, Thompson, for providing the update and the Q2 overview of us. I just run with you what we have done this quarter for enterprise business. So enterprise business, predominantly we have two business lines. One is our digital infrastructure services business and our business process outsourcing business today. Compared to Q1 to Q2, we have grown approximately 16% quarter to quarter. That's a substantial growth because we acquired some good customers in Q1. Now that has given our a good revenue. The customers like IDFC First Bank, we got a data center order from Oracle, from Indian Oil Corporation, and a couple of mid-sized customers as well. So that helped us to grow the business by 16% quarter on quarter, and this will improve further as well because these are the long-term annuity contracts. Let me share with you other updates on enterprise services point of view. In last quarter, we've added some 7 new customers in Q2 itself. Those are all the long-term annuity contracts. We have gone live 7 customers in Q2, including IDFC First Bank, Bajaj Electrical. We have gone live with from the mid-size of the Ujjivan Financial, which is going to be one of the significant deals. And also we've gone for a 2 cloud deal like Bata India and Kevin Care. So those are going to help us. We've added 500 people net in Q2, which is quite significant. But the important point here is the per person realization, revenue realization is significantly higher than the last year. our purpose and realizations was improved by 45% because we have focused into to the high-value services in the enterprise services business. That's something that's great for us. We also focused on improving the DSO because that's very important. So more and more private customers, so that we will look forward the improvement of the DSO. That's something we worked on that. That's the overall picture on that. So going forward, this really helps us for Q3 because since these contracts are now become stable and we have got some good visibility as well. We expect Q3 is also going to do well in the similar, at least double-digit growth in the Q3. And we look forward to CSAT improvement from all the customer side as well. So that's a brief update from my side with respect to enterprise services business. Hello?
Should we open up for questions?
I think we'll have Sachs update us about value business and AI Bharat Network.
Hello, good afternoon, good morning, everyone across the globe. Thanks, Thompson. Thanks, Sushant, for a good update. Let me give a brief update on our value business unit, which is the unit we've been investing in terms of building capabilities and getting new solutions to the market, which are digitally ready, cognitive enabled, and cloud aligned. As Thompson mentioned, we are finding the creative opportunities in our market despite the headwinds. Pipeline is growing, which is indicated by new logo acquisition that we mentioned. Our investments in build are equally being accepted by industry analysts, as Thompson mentioned, as well as by customers, especially in the areas of testing, cloud, and cognitive edge solutions. We also started our industry focus besides BFS, which we are born out of a bank. We started an industry focus in insurance, which is also gaining quick traction with close to probably 10 million in revenue from insurance clients across the globe, across our different solutions and business units. Our application analytics in business is also growing and continues to be a largest contributor for our value business, followed by cloud and followed by other business units, especially future tech. Moving on quickly to our other venture with RailTel called New Ray Bharat Network. We are now at a position where we have completely implemented the tech stack, which is required for us to be able to monetize the Wi-Fi platform. And we are open for business, and the traction is quickly building, both in terms of three segments. Large public sector undertakings, which have large marketing budgets, and we are able to attract them to come on the platform. We are in advanced conversations with a few, hopefully to be able to announce it in the next meeting, hopefully. The second area is our enterprise customers. Our existing 3i customers, which is quite a rich client base that we have, are also accepting this proposition and coming on the platform to place advertisements. The third segment is retail, which is quite a large segment to reach, but we have found a model to reach and cover the retail segment that is also gaining traction quickly. So we hope to have this venture produce quite significant results in the coming months. I'll end my brief update here and wait for questions later. I'll pass the microphone on to Harish Shenoy. Thank you. Pass it on to Asha.
Mr. Harish, we are unable to hear you. Hello?
Yeah.
Mr. Harish, we are not able to hear you. Ladies and gentlemen, we seem to have lost the audio from the line of Mr. Harish. Please stay connected while we reconnect Mr. Harish.
I think you can open up the floor for questions, Asha, maybe.
Sure. Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Divya Daga from Vijit Global Securities Private Limited. Please go ahead.
Hello, sir. I have couple of questions. My first question is regarding the clarity of retail. So the amount given of 4.5 crore below the operating EBITDA, is it the amount we are paying to retail as a share, or is it a product development cost?
No, just to clarify this is part of the contractual commitments, because the contract says that we have a minimum guarantee of 14 crores per annum, or 40% of the revenue which we generate, which is higher. So this is a provision which we make every quarter towards that effect, actually.
Okay. My next question is,
because right now our revenues are just started coming in, because it's a project where obviously the first 6 months we take time in building the platforms and product, and now it is ready, and now the revenues are starting to come in. So we make these provisions in alignment with that.
So are we expecting how much of revenue from this?
Yeah, maybe I will summarize, but Max, do you want to probably give us a stand update on the revenue funnel, because this could be a common question anyway.
Absolutely. Like I mentioned before, I think we have just finished the tech stack, which was by design. That it takes some time before you're open for business, and we are, like I mentioned before, public sector undertakings, enterprises, and retail. We have a healthy pipeline. We have a great season coming up, both Diwali as well as Christmas and New Year, where advertisements will increase. So we are hoping to see a uptick in the demand beyond the normal sustained business development that we would do.
Okay, sir. My next question is, can you provide me the timeline for the settlement of rupees 35,099 2 lakh receivables and 1,06,639 of payables? So when we will be able to settle this down?
So Sanjay here. So this is part of our existing, what we have applied to for a set off with RBI. These are old matters. These are old, payables from India and receivables to India, and we have approached to RBI for set off of outstanding. So we should be able to hear from them, by early next quarter.
Okay. And I have one more question. In consolidated results, we have a forex gain of 45 crore in this quarter and 6.1 and also a little amount in last quarter. So can you provide me the clarity of is it a regular gain or is it a accounting adjustment we are doing?
So it's not an adjustment, ma'am. See, what happens is we have two elements of foreign currency translation. This is a foreign currency translation that happens due to our overseas receivables in India. Now, we have two components in this quarter. One is due to we had a share application money from one entities from India to a step-down subsidiary, which got subscribed. And due to that, we had a currency gain. That is a one-time part of it. And the second one is on the rupee. If the rupee depreciates in India, we get that element of exchange gain in rupees for overseas outstanding. So that is the second element that we have. So these two put together is 45. But to answer your point, this is not regular. But we going forward also don't see such a big amount coming into our books in the coming quarters.
Okay. Just last question. What is our ideal EBITDA margin for next 2 to 3 years, and what would be the revenue target for this year?
Yeah, I'll take that question. So one is, we are definitely on a conservative outlook. We will, hit our number, which is told earlier, which is around 820 crores, without upsurge from RailTel, because that will be an additional top line for us, and also it will contribute to the bottom line for us, because we are anyway providing for the cost in our current P&L. Okay, that is one. The second to your question is, ideally, with as we are trying to change the mix, because 80% of the business, which is still in our old legacy or run models, and 2025 is a value business which are changing. It will gradually change, but I think what we are targeting is, mid-single digits PBT and, higher single digit EBITDA is where we are targeting in the short term, to your question.
Okay, thank you so much, sir.
Thank you. We'll move on to the next question. That is from the line of Pratap Maliwal from Mount Intra Finance. Please go ahead. Mr. Pratap Maliwal, your line is in the talk mode. Please go ahead.
Yes, sir. Can you hear me? Am I audible?
Yes, sir.
Yeah. Thank you, and thanks for taking my question. So I just wanted to ask, this quarter we've had a strong increase in the indirect cost, and that seems to have gone mainly in the VBU segment. So what is this indirect cost component? And from Q1 to Q2, it's almost doubled. So what is the reason for that?
So this is primarily due to, we had this increase in due to the increment that got affected in Q2. That is one element. And secondly, we have some projects wherein we have started the new projects, and those projects we have sign-offs coming in the coming quarters. So those costs have come, but we don't see that kind of indirect cost go up going forward.
Yeah, because we also, some of these projects, to your question, we over-invest, because some of the new deals we invest upfront, some of these costs. The second, also, if you look at it, the entire, cost of, new projects such as RailTel operating costs, all this are pre-booked here right now.
Okay. But for RailTel cost and that increment cost are given a separate line item in the business summary. So how does it reconcile with that?
Yeah, fair point. So what is there in the separate is that we have called out the MG for minimum guarantee for what do I say, to RailTel in that line. But other operating costs which are there as part of the operations, which is right now funding it. And then once the revenues are kicking in, it will move out of this cost. That is one. Second, also, as like what Sanjay said, there are some transitional costs from the new business which is coming in.
Okay. Thank you. And now there's another cost item called CBD in the business summary. So what is that allude to?
So that's the provision for doubtful debts. We go as per the policy of the company, wherein if certain receivables get stretched beyond a certain point in time for collection. These are primarily the government projects collection, which sign-offs get awaited, and we expect most of that to get collected back in future. But as a good prudence and as per the policy guidance of the company, we take that provision in the books.
Okay, understood. And just one more thing regarding our reclassification of revenue. So till now, we've had our business in the form of the run and the grow business. So my understanding was that I'm just trying to reconcile it with our current classification. So the run business now refers to the ES and the PS. Is that the run business that we had and the volume the volume business?
No, absolutely. Spot on. I'm really happy that you have been following us so closely. You're spot on. So the run business is what we inherited post carve-out, the lines of businesses and what has been doing. So predominantly, if you look at it, the entire professional services business and almost close to 75% of the ES business will be the run. So value business and some portions of next generation digital infrastructure management and other stuff which Sushant does comes part of the growth. You're absolutely right.
Okay. And just one last thing I wanted to understand regarding our hedging policy. I think we were supposed to put in place a hedging policy. Is there any update on that?
So we are, the hedging policy is under getting framed. We should be able to get the policy done by Q3.
Okay. Thank you. Thanks a lot for taking my question. Yeah.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sanjay, an individual investor. Please go ahead.
Hello, good evening. Am I audible?
Yes, sir.
Yes.
Yeah. So good to see a big jump in revenue for Q2 and in this challenging environment and compared to other companies which are really struggling. So it's great to see that, and congratulations to your team. Wonderful work there. We are seeing the negative impact on the bottom line. Mostly the gross margins are reduced on INS and cloud first. So are you seeing what are the reasons for that, and are you seeing the margins will improve in Q3 and Q4 going forward?
Yes, Sanjay. I think these are all interlinked. If you look at it, a lot of new businesses come in these areas. So we have taken in a lot of setup costs and transition costs and upfront costs which are there. And so most of the revenue extraction for the cost incurred, you will start seeing that coming in Q3 and Q4.
Oh, that's great. On the Railtel side, when are we seeing the Railtel project will have a break even or being profitable? Are we seeing in this financial year?
So definitely, Sanjay, because what I would probably acknowledge is that we were because the technology and the dependencies is pretty high. Probably we were late by 3 months. But I think now we have a good handle on the entire platform technology and I would call it a hybrid physical strategy. So definitely we are just waiting for some 2-3 large breakthroughs. If that happens, break even happen very quickly. Otherwise, definitely I think we want to at least cover our costs. At least the MG cost has to be covered for us, Sanjay. That's our first milestone because we are anyway booking those costs in our current P&L and it's also stressful for us with our limited capital which we have. So it's very important that we break through with that as a step one.
Oh, okay. And another question is about the big deals. I mean, are we seeing that the big deals are getting closed, or it is only the smaller deals are getting closed? I mean, how's the business scenario now? Is it improving compared to Q2 and Q1?
So,
sorry, go ahead.
Thompson, I was going to make a comment and then I'll go after you.
No, go ahead, Sak, then I can summarize.
So absolutely. So we're seeing a mixed, in different verticals actually, the behavior is slightly different. I don't think there's a single pattern. Like I mentioned before, you appreciated, our revenue has taken an uptick even expect to competition because we're able to find the transformative deals. And those are happening in not large monolithic deals. There are a few and we have our share of those big deals and we hope to announce them. But there are lots of mid-sized deals which are happening because these are digital transformation projects which are being taken up by the order of preference, like customer-facing, supplier-facing, not so much mid-office. So there's a lot of these digital transformation projects that are happening in the marketplace, and we seem to have a fair share of attraction towards those.
Oh, sure.
Yeah, and also slightly strategically, Sanjay, see that sometimes that's why we are also trying to figure out even in the Western markets like US and UK, there is definitely a potential for an opportunity for customers where they are looking for serious cost reduction from their current suppliers, and some of the contracts are coming up for renewal. So where we are now trying to participate and try and see if we can win some of those deals as well. But to your point, I think the run rate deals are increasing. Smaller deals are coming in. very systematically. If you see, there are a lot of new logos we have signed up. It could be small, it could be 100K, 150K, 50K, but it at least gives us a foot in the door. The second also is that we are also making a huge reconnect program like what Sachs told about some of our old existing customers where we are not expanded. We were with only one line of business. But all of them have their own perception of our capabilities because they've been with us for some time. But now, over a period of time, they're slowly starting to trust us with new lines of businesses because that is very important because that will expand with existing customers also. So those are the kind of positives, green shoots which are happening.
Oh, that's great. And I have a question about this product and platform like HTech, FeatureTech, and Campus Lab. So how are we seeing attraction now in the market? Are we seeing that deals are getting closed in this area?
Yeah, absolutely. Because Neuro FutureTech has been extremely successful because all the products, especially our CXO corporate, CEO, TSS, all of them are moved beyond MVP to commercial grade right now. We are having paying customers. And now we are into the stage where we are getting industry orientation of these products which we have developed. So, for example, utilities and gas in India, we've got that. We are working on healthcare for UK. We're working for credit unions in US. So that is now becoming even more better. And individually also, these companies are gaining a lot of attention. As you remember, we said that each of them will be independent companies which will create independent value. And there's a lot of interest for these products and platforms and where we want to also start filing our patents and IP also towards that and see how we can monetize it. So that is happening for Neuro FutureTech. And Neuro HTech also has been moving very fine because we developed on our 5G labs, IoT, SD-WAN, SASE. SASE, we already have paying customers, and that is now expanding. We are now trying to get into contracts with telcos who want to take it to the customer. We are on the initial stages. We spoke about it last time also. So that's positive. And in fact, we are starting to participate in 5G lab setups programs as well. Hoping to see some success there because there are a lot of contracts coming both in government as well as in private areas on 5G lab setup. SD-WAN, we have already implemented a few customers as well, and we are now trying to ramp up that in the Neuro HTech. The third is Neuro Campus Lab. Again, Neuro Campus Lab, we are creating a SaaS platform. We have already some paying customers. Now we are trying to make it US and UK. Typically focused on mid-segment educational universities and who are looking to replace their old PeopleSoft, Oracle, and things like that. That's the update on these three Neuro companies.
Thank you for that. My last question is about the cash part. It was discussed last time about the Vashi property. Is it something the property is already given on the use for someone or any plans you are having it for raising the cash?
Yeah, see, cash is a very big important problem for us, for the company, because we have to monetize these assets. Otherwise, fueling our growth strategies will become a difficulty, as we've been talking. Right now, I think we are in advanced, discussions with some NBFCs and some bankers finally, where we could probably use the Vashi property to support us with the working capital limits and other facilities.
Yeah, that's it. Thank you. Thank you very much, and wishing you all the best.
Hey, thanks, Sanjay. Thanks a lot for your support.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. Participants in the conference, if you wish to ask a question, you may please press star and 1. If there are no further questions, I now hand the conference over to the management for the closing comments.
Thank you. Thank you, Asha. Thanks a lot for the questions and the interest and the support you have shown us all this while, and be rest assured that your management team and your organization, we are working towards this common goal of creating value for all of us. Thank you.
Thank you, members of the management team. Ladies and gentlemen, on behalf of 3i Infotech Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.